our panel is about globalization of capital flows. Just as an introduction about people on the panel here. Shuji Tomikawa, he's the president of Mitsui Fudosan Investment Advisor and a ULI Japan chairman. He's the go-to person for anything about Japan. So welcome on the panel. John Zehner, global co-head of Client Capital Group at LaSalle. John is based in London, so I think he will give us a global perspective about capital flow. Ryan Botjer, Senior Managing Director and China Country Head, Tishman, Speyer, and ULI Trustee, based in Shanghai. I would call you the Chinese specialist. At least that's how I feel when I each time speak to you. And then Joe Gagnon, we don't know each other, but I'm really happy that you are on the panel. You are the head of Asia Real Estate for Warburg Pincus. Warburg Pincus has been increasingly present in Asia on the investment side, especially on the logistics. So thanks for being on the panel as well.
You?
Sorry?
You are the French specialist?
I'm the French specialist and German specialist, please don't forget. Okay. So we'll have 4 topics we thought we could cover to cover global flows, macro and geopolitical climate. Second one is capital flows in and out of Asia. 3 is investment asset classes, where to invest. And then finally, because that's a ULI topic which comes back each time, technology and innovation. As was specified maybe by Craig, we have the possibility, or you have the possibility to ask questions. I have here the questions coming to me, so any questions you have, please write it or send it to me, and I will ask the question as we go along. And we're also going to do some basically panel questions where you can basically give your view. So starting with the first topic on macro and geopolitical climate. A year ago, we were sitting at the ULI conference as well, and it looks like so much happened on the political front, so much which maybe we did not expect. So I wanted to get the panel's view on that. Maybe the only constant part, Shuji, maybe it's for you, is Abe. Abe is still there, okay?
Let me report.
So, does it work?
Mr. Abe came into became prime minister in December of 2012. And since then, our economy has been pretty much robust and stabilized. And we have a very strong economy. And Nikkei is getting to 20,000 just recently again. And if Abe continues to be this pro-business prime minister, we will be very much having an optimistic view of Japanese economy going forward.
Okay, good.
And we were shocked with 2 unexpected things last year also. So we have some anxiety for the global economy, but as far as the Japanese companies are concerned, many of us are making a record profit this year.
Okay, good. So now it gets a bit more tricky, because last year sitting here, we didn't have Brexit. So in the meantime, Brexit is there. So John, from your point of view, you're still in London. How bad will it be, or is there some reason to think it's a good thing?
I'm worried there's the person sitting in London and an American that I'm going to get hit with 2 questions.
Oh, there's one for Ryan as well, okay?
All right.
Okay.
Right.
That's right.
This is why I'm in the middle. I can't escape. Look, if you come to London, you won't notice a difference. London is humming. We also have another election tomorrow, so we'll see how that goes. I would tell you that the economy is beginning to show signs of a little bit of stress. Inflation's beginning to go up. The economy's not growing quite as quickly as it was. There's no lack of capital for real estate, but we'll see what the next several months bring.
Any reaction? No? On Brexit? Shuji, you have a lot of Japanese interest in London.
Yes, we do, yeah. We'll ask real estate questions later, right?
Oh, fine. Good.
Let me
We'll keep it for later. Good. Now,
Can I answer the Japanese questions?
Sure, of course. Okay. So now it's getting even more tricky. Ryan, I think you have an American passport, so I can ask you that question.
I still do. I haven't handed it in for a Chinese yet.
Good. So is Trump good or bad for real estate?
I That's a very loaded question with this group. And look, I think that just because Trump came out of the real estate industry, there's no real correlation between that and whether he's good or bad. If you look at some of the ideas that he's talked about, whether it's tax reform, deregulation, infrastructure investment, theoretically all of those should be very positive for economic growth and for real estate. We haven't seen the policies though, and so it's hard to answer that question until we see the policies. On the flip side of that, I think that there is worry about his policy of sort of economic nationalism, the travel ban that he'd like to impose, and sort of the transactional approach he's taken towards foreign policy, and how that might impact capital flows going into the U.S. I mean, one thing I could say anecdotally is that I've been flying from China to the U.S. back and forth for the last 20 years, and planes aren't full now. And this is probably the first time in the last few months, or I don't know, the last 4 or 5 months, the planes are not full going back and forth.
That's a sign. So
it's a sign of something.
So could the sign maybe be in China? Let's switch there. And the question is maybe for you and also for, I think, Joe, you are based in, where do you live? In
Beijing.
In Beijing, okay. So even closer to the center than you, Ryan, in Shanghai. Yeah. So maybe the question then goes for you. There's going to be the new change of guard coming up in October. Is that good?
2017 is a political year in China, and people kind of forget that politics exist in China as they would in anywhere. 2017 is, there will be a lot of things going on, just you and I will not know. So all of it will take place behind closed doors. But the one thing that you can be relatively confident is in 2017, stability will be the priority above everything. And so until October, don't expect much surprises out of China. And sort of the whole reshuffling of the government, which is and this is a very important year because it's not only the next 5 years, but really the next 15 as they're setting up the potential successors to the current Xi Jinping. You won't see much because that's all going to be stable, and so we're seeing that in fairly stable growth. In 2018, 2019, I think there's probably a good chance for a lot more acceleration of reforms that may have a cooling off impact in the economy. The economists, their EIU forecast is forecasting growth in 2018 at 4.5%, which would be the first time we've seen any growth rates like that in 25 years in China. So there are, and I would disagree with that a little bit, but there is definitely a lot of reforms that are sort of pent up. The government, I think, is preparing, setting the foundation for them to take on this next wave of transformation in the economy. So there will be a lot going on. You just won't see it for the next 6 or 9 months because it will all be behind.
Ryan, you concur with that view?
I do, and I think it's interesting when we talk about the transition in government in China. Most people are focused on the standing committee and the fact that probably 5 out of 7 roles will change, right? But within the 25-member Politburo and the 200-member Central Committee, there could be as much as 70% turnover. And when you add that to the fact that across the country right now, district governors are changing, municipal mayors, provincial, there's an infusion of a lot of new blood that's coming in that'll be settled ultimately in November when it's all done. But there's an enormous amount of change that's happening, right? And I think that when change happens, it means that policy often slows down and the focus is on stability. But on the back end of that, I think we'll see, most people believe, Xi Jinping in a much more consolidated power, and perhaps 2018 greater focus on reform and perhaps really a focus on taking on the large debt issue that exists.
I find it fascinating that maybe for the first time we seem to have more transparency in the political process in China than we have in the US. So that's maybe a good thing. Okay.
For us in the US, we're still waiting for Moscow to give us what the orders are. So.
Okay. Sorry.
True.
I didn't expect the panel to move into a late night show, but we'll. One word about Europe, France. Any reason to be more optimistic, John?
You're asking me about France. Come on.
You should answer.
Come on.
It's a planted question. Okay?
Yeah, that's why that you didn't tell me ahead of time. Look, I think in Europe, and part of it's a result of the reaction to the U.S. president, all of a sudden all these concerns about the far right in Europe seem to have receded significantly. So right now, politically, continental Europe, carving out the UK, is feeling pretty good. And it's showing up also in terms of confidence and economic growth.
And I would concur. It's true that the political landscape in France has changed dramatically with the election of Macron, just because we finally have a president again, you know, because the last two ones were something else. And I'm confident that he will get a majority. And why is the majority important? Not necessarily for what France can do, but what France can do with Germany. Because that's really the key, okay? Because that's really has been the driver, you know, and that has been missing. And so that makes me optimistic. It's more the relation than it has maybe on the German election or the German cooperation coming forward. But there's, of course, a lot of heavy work, you know, which has to be done, and we'll have to see if people are ready for that. So I think as a conclusion, fairly, you know, despite all sort of the bad headlines, I think I'm sensing more optimism, okay? Then the question is, let's maybe go to the polling. Sorry, I forgot. We have a polling for you question. If you could maybe put it up. Macro geopolitical, which outcome of the election referendum will have the most impact on the real estate market in the coming 2 years? So please vote. Wow. Okay. Good. So still some uncertainty left, huh? And Turkey was put in. You know, Turkey is an important country. You know, but not maybe that important. In the election of Macron, 0. Okay. More handshakes. Sorry. More handshakes are required. Okay. Capital flows in and out of Asia is our second topic. And again, I encourage you to send me some questions, which I can then share here with the team. You can use your device, and I get them here. So I will definitely ask any questions which show up here. So capital flows in and out of Asia now. Maybe, Shuji, we can start with you again. The famous Japanese investment, the wave, coming to Europe or to the US. I was telling you before at lunchtime, it's looking like looking at grass growing. It seems to be taking time in comparison to, for example, the Korean investors, or of course the Chinese investors. Is it when? Give us a date. Yeah.
June next year.
Okay.
The four whales of Japan, GPIF, Postal Insurance, Postal Bank, and public employees pension funds, regional public employees pension funds. Those four whales are about to begin their investment in real estate for the first time. And one of them, regional public employees, invested in Otemachi commercial office building with the Mitsubishi estate last year, and they're also investing in open-ended funds in the United States. This year, GPIF, the largest fund, over $1.3 trillion, is starting its process of interviewing managers. So it's starting, and realistically, the investments will probably happen middle of next year.
And in your view, these investments will be targeting which region first? The US, Europe, or rest of Asia?
Well, of course, they want to invest in Japan to start with, but Japan seems like too small a pond for the whales, so they have to go to the States, and they have to go to Europe, and that's the destination that they're looking at.
Okay, John?
I think some of the minnows, to continue with the sea life analogy, the corporate pension funds have started to invest already. And just because I've got visibility on this, we've received 5 commitments in the last, I'll say, 6 to 9 months for our open-ended funds in Europe and the US from corporate pension funds. They're not of the size that Shuji's talking about, but they're coming.
Yeah, just to talk about Japanese corporate pension funds, that they are not as big as US corporate pension funds. The corporate pension funds in Japan, which has $1 billion and above AUM, is only 76. The rest 3,800 corporate pension funds are smaller than $1 billion AUM and below.
Okay.
But we don't want to diminish the importance of the corporate pension funds. He's just jealous.
We have a question here coming in for you, Ryan. What impact are the capital controls out of China having on global capital markets, and how can developers respond to growing default risk in markets? For example, residential market in Melbourne in Australia.
That's a great question on the default risk. But in terms of capital flows, first of all, there has obviously been an impact from the government. They are restricting capital going out. There is greater scrutiny on larger transactions. Anything that's $1 billion and more is scrutinized more heavily. I think the impact in reality has had a bigger influence on retail capital and smaller mid-sized companies. And of course, capital outflows are not dead. I mean, we are seeing actually really large deals get done. Recently, CIC's transaction of a logistics platform in Europe, China Life buying a platform in the US. But what you are seeing, the capital that is going out tends to be more of the state-owned capital, larger players doing more portfolio transactions that are strategic, that are about diversification, building scale, so forth and so on. The harder part is the people getting squeezed, which is the retail capital, and those are the ones that are buying the apartments in Sydney and elsewhere. I think that to the extent that you have Chinese partners that are investing in projects, being very early in your capital calls is critically important, giving them time. It's not a question, frankly, of whether they have the money. It's just the process and time that it takes to navigate and get capital out. And so you have to be very early on in that dynamic. And I think that, looking forward, at least for the rest of the year, portfolio deals will still get done. The individual transactions will have a much harder time.
Joe, maybe related questions. Let's not speak about capital control, but people control. You have sometimes these executives which disappear for 24 hours, come back. Is that just anecdotal at the end of the day?
I mean, what's going on is a total reshuffling of particularly in the state sectors. And actually, about 12, 18 months ago, all the people that got sort of pushed around were in the energy sector, which was the most dominated sector. The sector that they've just shifted to, and actually where you will see continued movement around, will be in the finance sector. So you've seen senior regulators in the insurance, and in fact the head of the insurance regulator about a couple of weeks ago was removed. Similarly in the CSRC, and sort of the attention of the G-Way, or the bodies focused on the anti-corruption, is now very much focused on the financial sector. Again, this is a long-term positive. I think most participants in the market do see this as a positive, bringing more discipline and a more rules-based approach. But there will be some transitions, and as with any transitions, there's bumps. And so we take it as a participant in that market for now 22 years that these are good and necessary changes, but there will be some surprises.
One of the questions here, where do the panel see investment in Australia, going up or down? So not really linked to capital flows, but any view on Australia? I'm going there next week. Would be happy to get your view ahead of my trip.
That won't be very helpful for this panel, though.
Okay.
I'll start.
Yes.
Look, I think Australia right now is still attractive to many investors. You have to be a little more specific about asset type. And a lot of the big international investors are getting full of Australian assets. But nonetheless, Australia has been very hot and attracting a great deal of international capital to date.
I would say we're not active in Australia, but the correlation to China is very high, both on the resources, but also a destination increasingly for education, retirement, et cetera, is huge. But one of the most interesting things about Australia, and we have spent a little bit of time, is the growth of Melbourne and Sydney as some of the fastest growing cities in the world. I think Melbourne, it's like 1,000 people a week are moving from internationally into Melbourne, which is pretty dramatic when you do the compounding. And so that inflow migration we think, is pretty positive.
From Chinese...
One particular difference for the Japanese investors or Japanese people is there were so many inbound traffic from Australia to Japan in the past 4
Yes.
years, and it's unprecedented increase. And because of those influx and visitors from Australia, we got very much familiarized with Australia too, because we meet these people all the time in Tokyo. And that is difference between late 1980s investments by the Japanese into Australia, where we were not familiar with the Australians at all. But today we have friends in institutional and financial sectors through those visitors from Australia.
Okay, good. Makes a lot of sense. Let's go to the question for the audience. So capital flows in and out of Asia. Which investors will be the largest net investors in Asia in the coming 12 months? Okay, surprising. Any comments? You want to react to this? Does it make sense? I mean, it makes sense. It's the audience, of course, but
you don't invest at all?
we keep our plan secret at Allianz. We have invested close to $500 million in Asia last year. So just for the record of whoever voted zero. Okay.
Well, not whoever, everybody. Nobody.
Okay, nobody. Sorry. Yes, you're right. Any reaction? Does it sound okay? North America, really? You think the U.S. capital coming to Asia is going to be really number one? Or number two, sorry. Any views, Brian?
No, I mean, I would be very surprised if North American capital is number two coming into Asia. Trying to make sense, I think interregional investment also makes a lot of sense. I don't see huge capital flows from the U.S.
John?
Recognizing that the U.S. pension funds still tend to be the biggest investors in opportunity funds, and that there are a lot of opportunity funds still in Asia, I think it's probably more than we're thinking if you look at it through that lens. On the core side and the core plus side, I think that's probably right. I agree.
Chinese investors, are they really number one investing in the rest of Asia? That's just a given.
One thing that people don't talk a lot about is the One Belt and One Road.
Okay.
And this is for those that aren't familiar with it, this is essentially the Marshall Plan equivalent that Xi Jinping is. His one big foreign policy, and Ryan can speak about this as well, is really to try to integrate the Chinese economy into the rest of Asia, particularly South and Southeast Asia. And really what they're trying to prevent, I think geopolitically, is trying to be encircled from what much as the Soviet Union, and so they really want to build their economies and integrate them in with the Asian economies. And thanks to Donald Trump and the withdrawal of the TPP, the Chinese now actually have a really good chance to do this. But if you talk to every SOE or every state-owned enterprise that we talk to, by a political mandate, they must have a One Belt, One Road strategy. And these are where the capital resources are in China today. And this is a decades-long trend. And the political mandate for these SOEs is, where are you investing in Asia? How are you investing in it? And this is a national crusade to really try to push the economy. And so you look at countries where this has been most taken is probably Malaysia. And you can see huge inflows of the Chinese capital into Malaysia. And I think you'll start to see that even more across the region as really and it makes sense. China is Asia, it's in that integration of those economies, but the political mandate is quite big.
But largest investments by the Chinese into other part of Asia is still Hong Kong's the best? The largest?
Still, I think, into Hong Kong. I think, it's interesting, if you look at Hong Kong and you look at the transactions that happened, especially in the land side and the development side over the course of the last year, I think a lot of Hong Kong developers have been surprised by just how aggressive Chinese capital has been bidding on land, and where residential land prices have gone through the roof. A lot of that is Chinese capital coming in and bid. So they're still very aggressive throughout Asia on the development side, and I fully agree. I think the One Belt, One Road system is. I mean, it comes from Xi Jinping. We know that they're going to put resources behind that, and I think you follow that capital.
So statistic I read about the Marshall Plan, into your analogy, is that I think the amount is 10 times the amount of the Marshall Plan of 1950. So as let's take a European investor, why not, wanting to invest in China, what sector then should one invest to be closest to benefiting from what's happening with the one road, one belt? What would that be?
I mean, to us, a lot of that money is going into infrastructure and the integration of the infrastructure. Yep. So, I mean, just here in Singapore, for instance, the train between Singapore and Kuala Lumpur is probably a near-term implementation, which will likely be built by the Chinese. And that type of an integration, so tourism and I would say infrastructure related, such as logistics.
Before we move to asset classes, maybe still on geographies, Japan. I was in Japan on Monday. Is it too late for those who have not invested in Japan in the last few years? Or where do you see still good opportunities for non-Japanese, even non-Asian investors, I would say?
Certainly, Japan is very crowded. And today, we see, for the first time, global core capital coming into Japan, and the people who we did not see in the past, we saw opportunistic people, we saw development people, but today we see global core funds, global core investors in Japan. And I think they have a longer viewpoint than the rest of the investor group.
Okay. There is no expectation after the Olympics that there might be a correction or not? I don't know.
Well, post-Olympic correction is not only from Olympics itself, but from demographic changes that's going to happen in Japan.
Okay.
I would tell you the international investors are run hot and cold on Japan. And some who like it, I agree, I think there is more core interest today than there's been. But there are a number of investors who just plain won't touch Japan, and their concern are the demographics.
Mm-hmm. Ryan, and from your point of view, for non-Chinese investors, they want to invest in China, is there room for them, or was the pressure from domestic capitals such that they don't get a seat at the table at the end of the day? Your development projects at Tishman Speyer, where do they go to at the end of the day once you sell them?
Well, so, I mean, right now, I think that the market is heavily dominated by domestic capital, right? And I think that the capital restrictions has only exacerbated that issue because the large institutions that, the insurance companies and the such that are continuing to print money need to invest. And if they can't get their money out of China, they're going to continue to invest more in China, right? So I think that in some ways it's a good environment to be selling assets because there is a lot of liquidity that exists in the marketplace that is very domestic-oriented liquidity. That being said, there are still many opportunities within the major cities. I think that you have to be a little bit more creative than you've been in the past, just because land prices have escalated quite dramatically. And so how you source opportunities and what you look at has changed as the cities have evolved. But there are still many active foreign players in the market as well.
One of the audience questions, I think that question comes back every year. Is it time for investors or major regional players to look towards opportunities in Vietnam and Philippines? Okay. If not, when and what needs to happen first? I think, Joe, I know about you personally, but I think Warburg Pincus is quite active in Southeast Asia, so maybe you can answer that question.
So we currently have 2 platforms in Vietnam, both in the retail and the hospitality sectors. When we made our first investment in Vietnam in 2013, interest rates were 14%. When we had done due diligence, they were 20%. Interest rates are now 7-8%. So you've seen some pretty good macro stability come to those markets. Interest has really picked up. We see a lot of the same development trends that we saw 10, 15 years ago in China playing themselves out in Vietnam. There is a fair amount of geopolitical risk. Vietnam sort of sits in a active geopolitical area in the world right now with the South China Sea, or as they would call it, the East Sea. But the fundamentals of that country are incredibly interesting and exciting. But at that macro or the micro level, when you look at land or whatever, there's also going to be a lot of interesting and surprising things. So it's great fundamentals, but also a lot of opportunities to make mistakes. So you got to be careful.
Because Vietnam is opposite of Japan when it comes to demographics, Japanese retailers and Japanese investors in infrastructure are very interested in it. And only this Monday, Sumitomo Corporation signed an MOU with the Vietnamese government to develop North Hanoi with a railway as an infrastructure.
Okay. Good. Let's move to now the investment asset classes. And where are the best opportunities to invest? That's usually when people take most notes. Okay, where do we start? Logistics, the new asset class everybody wants to do, is a good proxy for retail. Is it something which will come and go? Who wants to start?
We have Dr. Seek.
Okay, of course, but I'm waiting for your question. Yes.
I'll start, François. We are a logistics developer in Japan, as you know, and developer of logistics in China as the financial partner. Look, I think there are a number of people paying attention to the sector, so there's no lack of competition, but the supply-demand dynamics for contemporary modern logistics in those two countries still seems to be pretty good, and my guess is it's got legs. Doesn't mean there won't be local supply-demand imbalances, but still looking good.
Okay. Well, Joe, maybe that's...
I mean, I would agree with that. I think it does have legs. I think it's getting harder to build scale and to build those platforms, given that many have been at it for a while. But the macro trends are still there in favor of it.
One of the things so we have a couple different logistics platforms, one of which is amongst the larger ones here in Asia. One of the things that we really like about logistics, though, is that the build cycle for a building is short. And uncompared to one of the buildings that you may be building where it's a 4-year build plan or something, logistics tends to be traditionally a 12-month build cycle. And why we like that is the market can correct quickly because supply gets cut off. And whereas if it's a big multi-use, you get cut off here, but you'll still be delivering for the next 4 years. And so there is certainly, you go in cities in Wuhan right now or Chengdu, there's too much, but it's been stopped, and still the fundamentals are there. And so we do really like the logistics. We believe that this is a decades-long trend yet to come, and we like this self-correcting factor of the asset class quite a bit.
We started investing and developing logistics warehouses in Japan 4 or 5 years ago. What we realized, I'm not sure if John agreed, but in certain places in Japan, because of the shortage of labor, who is supposed to work in the logistics warehouses, tenants may not come to those places where, in real estate-wise, it must be a logistics warehouse location, but because of the labor.
That's true.
You'll know more about that than I will. But yeah.
No, I visited one of the warehouses in Japan. It was it looked like a luxury hotel. I mean, the piece where the workers, people working there can have lunch and everything, and to attract talent. I think from Allianz's point of view, it's one of the asset classes which we like because of its global nature. So if you really want to have a global play, I think that's one asset class where the sum of the puzzle seems to make sense to play the supply chain across the world.
I agree. Service office, service apartment, logistics, and hotels. Those 4 asset classes can be the global asset class.
Yes.
People who are renting from you in Amsterdam may call you to rent a space in Long Beach.
It's true. Any reaction to that? Yes. So we should give up on office, no? I mean, no. What's your view on office now? Especially, China seems to be either a lot or not enough. I don't know how to explain it. When you want to buy an office building in Beijing or Shanghai, it's being very difficult.
Yeah.
There's still a lot of buildings being built.
Look, first of all, China's not one market, right? It's many markets.
Yes.
There's a lot of different dynamics, and if you're talking about in second, third-tier cities, enormous vacancy rates, and unless you're you have a long-term horizon and you're buying in well below replacement costs, it's hard to make the economics work. If you're looking at Shanghai or Beijing, the fundamentals are much better. There is still very strong self-use in growth in the domestic market. You still have very strong absorption of space, specifically out of the financial industries, also the tech industries. And it is very hard to find quality assets that come to market. And so, you see going in cap rates at sub 4 in most cases, right? So I think that when you look at a city like Shanghai, and if you believe that it is going to emerge, if it isn't already, as one of the major financial capitals of the world, the demand is there, and the interest in office is still there.
But how far off are we from the vision from Bill before of Brookfield about creating these places? So sort of the next generation of office space.
It's happening.
It's happening.
It's happening. And I think in many cases, in many cities around Asia, but also in China, it's led by this sense of mixed use that is being developed, right? And within the context of mixed use, you have the ability to create new places and revitalize how people interact within the built space. So that's for certainly happening today.
Okay. One question here. All cross-border core investors complain about pricing and lack of stock in APAC. Should they just knock 50 basis points off their return projection and pay up?
I think if they move 50 basis points, they're still not going to buy
They're not
it.
going to get it. It's not enough.
That's the reality. I mean, it's...
Okay, it was worse than expected even. That's okay. Is it, so that will continue, I guess, huh? That pressure on capital?
No, it's continuing.
With a global aging population, does investment in aged care, senior living, get much attention from international investors? Is there something to be learned from Japan? If there's one country where this should be a booming industry, but it's not really, is it?
The operator is an issue because the senior housing has been historically built for inheritance tax avoidance purposes by the small landlords. Each senior housing in Japan is pretty small, 40 units, 50 units per building. And it's run by pop-mom operators. And it's very difficult for institutional investors to invest in those small pieces of senior housing at the same time with the operators that are not matured. So that
seems to be a global issue, maybe different in the US. China maybe will lead the way there, maybe? I don't know.
We've looked at this sector heavily. We've actually, as a firm, invested quite a bit. We have 4 separate hospital chains, so we've looked at healthcare services. The reality in China is no one has the model right. Is it a for-sale model, a membership model, a monthly rental model? And so they're still grappling with what is the model of delivery. And to that point, I don't think there's one operator in the country that has certainly 3 profitable sites. And so it will change the demographics. You look at the numbers, it has to work at some level at some point, but it's still, we feel we haven't seen the magic model yet.
I think also in China, you're going to see technology come in a major way to help deal with this issue. Sort of the delivery of healthcare in a different way than it's been done in places like the US and elsewhere. And but the demographics are very clear, right? And if you look at sort of where who's earning a lot of money today in China today at the ages of 40 and 50, and over the next 15, 20 years as they start to age, the consumption power and the opportunity is enormous.
So let's see if the audience has been convinced about the investment opportunities in Asia. So the question is, investment classes and where are the best opportunities? Should you be a net seller or a net buyer in Asia in the coming 12 months? So should you be a net seller or net buyer in Asia in the next 12 months? Net seller, net buyer, or no opinion? Oh, a lot of time to answer that simple question, huh? Net buyer, good. I guess it makes sense, huh? The fundamentals of Asia are still still there. The reverse, would have been a strange answer. Okay, so now last section of our panel is about technology and innovation. We had, a lot of it, here today, and the speed of innovation, affects our industry, new trends. Okay, let's start with maybe the most difficult question. Give me your best idea or insight on the effect of technology.
Just coming from Shanghai, the one idea is this Mobike or OFO, which I don't know if anyone's been to China. They're now coming to Singapore. The idea is now stationless bikes that you can rent off your web phone because they have a GPS. So now these companies, there's 2 companies in China, they each have on the road something like 3 to 4 million bikes. And so what happens is you come off the subway, you jump on a bike, it costs you 5 cents, 10 cents. You can ride your bike, you leave the bike on the road where you're done. And so all of a sudden it has changed Shanghai, literally changed Shanghai. What used to be too far from a subway station now is okay. And so
Good point. Meaning proximity, therefore, to public transportation can be mitigated by a guaranteed access to some bicycle in that case. Okay, good. You have to answer the question, all of you. So please give some thoughts. Okay.
So I'll answer it in a different way than perhaps in investment.
Yes.
But as a developer, it's been amazing to me sort of how design has changed, right?
Okay.
And we're now doing things in China where we're utilizing BIM from the architects and merging that with virtual reality so that we can look at our buildings and floor plates, even before we start construction, literally walking buildings. And I think when we talk about place setting, placemaking, and the rest of it, it's really revolutionizing how you can conceive of a building and the spaces that you're creating. And I think that's really interesting.
Okay, good point. John?
Mine's a little more boring. I still think the online shopping and bringing logistics closer to the CBDs and what that's doing to shopping centers. We are repositioning shopping centers to combine medical office with shopping because there's not enough demand for the shopping on a standalone basis in these centers. And we're having to really rethink the impact of that on some of the shopping centers we're buying and owning.
Okay.
This technological changes and e-commerce has brought us opportunity for investing and developing logistics warehouses, and that gave us opportunity to buy useless land, and the land which used to be useless until 5 years ago. And those suburban properties have now become prime properties for logistics warehouses and data centers. So those are the revolutionary changes that we have seen in the by the technology.
Okay, good. Maybe one example for Allianz is site visits. We are now doing them by drones, drone company, and they go and visit the assets for us. India, China, wherever. We still send some people eventually, but you get much better information from the drone than sometimes from the people coming back, usually without pictures. So. It's an Allianz-owned company, but open to anybody. We'll give you the website you can use it for.
in Beijing, they'll shoot your drone down.
Oh. No, they don't. They take care of all the authorization. So you order what you want, and they take care of it. Pollution might be an issue because you might not see your building always. How are you doing with your retail portfolio? What did you miss? So. Mitsui Fudosan, you guys have fair amount of retail, huh?
We have the largest portfolio of shopping center called LaLaport, and it is becoming the place where 3 generations of the families have something to eat rather than place to shop. And food court has become so important for us in the shopping center. And other leisure purpose cinema complex and so on, other than the shops and merchandising of the shops have become so important.
But it's not the same economics, no? I mean, I understand replacing fashion retail by food and beverage is good for the center. It's a little bit less good for the economics. So
I believe every developer in the retail business is looking for an opportunity to try to grab the money from those online shoppings.
Yeah. John?
Well, believe it or not, we're the largest owner of retail space in the UK. And so that gives us some interesting experiences. I think you just have to be careful in what you buy. and you can't be deceived by attractive cash yields.
Yeah.
I think there are an awful lot of people who've been caught by that in the last several years. So that's just because the e-commerce is having such an impact.
Sounds to me retail is not as core as people think it is, no?
Correct. That's changed completely.
Thoughts on build to rent and residential as an asset class?
I would tell you that as we talk to institutional investors, in addition to logistics, the asset type they want most is residential and buy-to-let, and that's a global phenomenon. I think it really only works in the US and in Germany in any scale, but I think places like the UK and Australia are working hard to try to develop that as an institutional asset class.
The model may be very fundamentally different. So we actually, about 4 years ago, invested in a company called Mofong, where it's now the largest multifamily or for-rent platform in China with about 30,000 units, which on a global basis is still a fraction, very small. But they don't own the real estate. What they do is they use a budget hotel model where they're renting on a long-term basis an older office building or an older retail podium for maybe 10 or 20 years and basically making and cutting it up into shoebox apartments. So the model of what is multifamily, and I think a lot of people are now looking at this, you know, like the week work, we live model where it's like common shared uses and stuff like this. I think the concept of what is multifamily itself and how that gets deployed into the markets will be very different from what it has been in the US or Japan, but it's such a huge need of the rental class in China is measured in the hundreds of millions and hasn't been served to date by institutions. So it undoubtedly will work in certain formats. It may be very different though from what we know traditionally.
Shared space, so WeWork, is a threat? I mean, this question comes back every year, but is it getting real? Meaning that this type of companies come in between, you know, you as a landlord and the tenants, Ryan. I mean, you might have also experience in the US as.
Yeah, sure. I mean, WeWork is a large tenant of ours in the U.S. and in many markets, and I think that they are, you know, that is a platform, and certainly there are tenants that are attracted to working in that environment. I think that perhaps what's more interesting than that is that we're also seeing a lot of corporations move their space into a similar type of environment, right? So the idea of more of an open floor plate, less space per individual, so forth and so on, is having a bigger impact on real estate because you now need less space. You know, you used to have 10,000 square meters, now you need only 8,000, even if you're restacking your own space as they redefine their own interiors. So I think that is having an even bigger impact than just sort of the WeWork shared space phenomenon, but it's the same sort of concept. You're changing sort of how you work and you know, the fundamentals of that space.
You have been to Japanese office, right?
Yes.
So we are the only exceptions in the Western countries that we, from the beginning, used to work together in open space.
Yes.
So it doesn't reduce the square footage that is necessary.
Yes, meaning you already have the density of WeWork. Yes. I have not seen the free beer in your office, but maybe that's some progress still. Before we finish off with a little a quiz for you guys, any question in the audience for those of you who are slow typers and prefer to have the mic? So, Greg, maybe you can see if anybody wants to ask a question directly.
Can't see any hands, François.
No hands. Okay, good. No. Then we'll finish off with a little quiz. So here it is. You can only answer two ways. You can say long or short. Okay, long you believe it, short you don't believe it. Okay, and we'll start it. We're starting with.
Raise the hand.
No. You just have to say long or short. I say a word and you basically say the word. So let's put ourselves today. Okay, Trump.
Short.
There's only one answer.
Long or short, whatever your answer is. Okay?
Long for 2 years and then short thereafter.
What's the duration we're talking
It's
about?
today. Okay.
He will last 2 years, right?
Okay. So you won't escape the question. You have to say something, Shuji.
Short.
Okay. Macron.
Long.
Theresa May.
Long.
Abe.
Long.
Okay. Now we go to 2 years from now. In 2 years, China.
Long.
Okay. London.
Long.
2 years. Okay. Good. Hong Kong.
Short.
Okay. Japan.
Long.
Okay. Now, 5 years from now, okay, low interest rates. Shuji?
Still long.
Okay. The flow of money in real estate.
Still long.
Long, okay. The real estate cycle. Where we're in the cycle?
In 5 years from now.
Yes.
Long, but short before that.
Okay. 5 years from now, the impact of robots, on jobs.
I'd say short.
Short, okay. And now, in the last piece, 10 years from now, Shuji, office space. Do we need office space?
Short.
Short, wow, okay. Student housing.
Long.
Okay. Retail.
Long.
Okay. Data warehouses.
Long.
Good. That concludes the panel. Thank you very much.